So how should we think about this? Should we be more concerned about the consumer, Guy? What do you think?
I think it's just, for me, it's just a reiteration of the fact that we've been talking about the consumer and the weakness for quite some time. So Walmart said nothing that I don't think all of us knew already. And the question really is, does Walmart win to that? I think they absolutely win to that. I understand the stock traded lower today. We've seen this before, maybe not to the magnitude, but I think 3 or 4 quarters ago when the stock was making an all-time high in like the 106, 107 area, we had a report. Stock then subsequently traded down to the low 90s and bounced. I think that's what we're setting up for now. People are going to indict the valuation. I totally get that. The valuation is rich, but the environment that Walmart is talking about and being cautious about is the environment that Walmart wins in.
This is where they can take share, right? Because they can eat some of that cost.
Oh, maybe. I mean, you saw the news out of Kroger this morning, right? So the CEO is talking about they're looking to cut prices to better compete and take market share back from Walmart. Listen, that's all good for consumers. If you think about it, have Walmart and Kroger beat each other over themselves, to get market share. It's only going to be good for consumers. There's 2 things, though, I take away from this, and maybe this is, as we get to the end of earnings season, is worth noting. I mean, Walmart is eating a lot of those input costs, right? They're not passing them through. They're not in a position to do that if you think about their competition. Now, Kroger, if they cut prices, well, they're doing the same thing, right? And so at the end of the day, when you kind of start to think about multiples, you start thinking about who's the contributors to earnings growth, that sort of thing, you might see margins that just kind of peaked out for a lot of consumer-oriented sort of things. So, again, it's also a political environment where the administration is going to look not particularly kindly to, companies that are passing through, costs, basically increased costs that they've caused for all intents and purposes. You think about a war, you think about tariffs, to a consumer that's strapped right now.
I think this is an interesting sort of test, Julie, in terms of how you look at the same sort of data points, because we have a very positive interpretation from Guy in terms of this being the exact environment that Walmart will thrive off of versus what Dan is saying, and that is that the premium valuation that it stands out might be at risk here. What do you think?
I agree very much that the valuation is a stumbling block for a lot of people, because you can't really sustain this level of a valuation if you're going to have margin compression. And I think it's hard to see how they don't avoid margin compression. But for the longer term, these periods are great opportunities for Walmart to introduce new customers, higher end customers who would never have shopped there, to the brand, and to recognize that they can be really profitable for them long term. So what could be an interim headwind in terms of margin compression and a high valuation could, for a really, really long-term investor, actually be an opportunity. I think that the real question is, how long will we see gas prices where they are? Because it is going to have a negative impact on their low-income consumer. We just have to look at credit card data and see how it tapers off at the end of the month. You see that kind of low-income consumer is really pulling back right at the end of the month before they get paid. That's not a good sign.
I mean, this is a very interesting stat, I thought, out of the Walmart earnings release, and that is the number of gallons per pump was below 10 for the first time since 2022, Steve. And that really shows you how stressed, how paycheck to paycheck the consumer is right now.
Yeah, and this is why when you have a supply shock, it didn't have anything to actually push for the demand destruction. So when you're looking at Walmart, Guy touched on it right out of the block, valuation. I could buy Amazon for a cheaper valuation, and for in large part, for years why the stock ran was because it was supposed to be another Amazon-like stock. But if now you're telling me that it's not going to grow as quick, then I'd rather just go buy Amazon. The only thing I find is that if I look at ad dollars, ad revenue is up 38%. So now you might say, well, that's a very small portion of revenue, but it's 25% of operating income. So if you look at this and you think that, to Julie's point, gasoline prices are going to come down in the next couple of weeks/months, then you want to be a buyer on this dip at Walmart.